Hi everyone, it's your daily 10-minute business and finance news wrap for this Friday, the 23rd of July 2021. The Australian share market hit a record high today. That's despite those growing COVID cases locally. The S&P ASX 200 up 0.1%, 7,394. Health and tech stocks led the gains. And for more, I spoke earlier with Capolingua from ThinkMarkets.
It's worth considering that markets look forward, not backwards, and investors are factoring in future earnings, which they are hoping, and that's the big word, they're hoping will improve once lockdowns come to an end, which markets are confident that we will eventually get a handle on the situation. The other upside, I think, from the lockdowns, it is spurring vaccinations, and the market wants to see us get close to this idea of herd immunity, which is expected to occur around that 60 to 70% vaccination rate. Many investors would suggest then that the governments are going to change the way they handle COVID flare-ups and move away from this lockdown mechanism. And that ultimately will be good for company earnings and for Australian economic growth down the track. So markets are looking further down the track than what's happening right now.
Given the restrictions that we are seeing, though, are we seeing a shift to growth assets rather than value? And, those that would have benefited from a reopening economy, which was what we were told to keep an eye on towards the beginning of the year.
Yeah, lots going on in that space as well. This idea of what's going to do better, growth style stocks or value style stocks, and much of that is probably beholden to the move in the long-term bond markets. And over the last few weeks, we've seen long-term bond yields fall significantly, and that has bolstered the case for certainly growth stocks over value stocks. Growth stocks are typically stocks with higher PE ratios, so you're paying more for those earnings. So those earnings tend to be skewed into the distant future. When those long-term rates come down, investors tend to discount those long-dated returns at a lower rate, and therefore valuations of those companies tend to rise faster than other companies. So they certainly do have an advantage at this point in time. I wouldn't count out the reopening trade. I think, as I said before, I think we will get past this current phase of lockdowns and markets will be in a better, the economy will be in a better state on the other side of this down the track. So we could, Ricardo, and we said earlier that those share market doing very well right now, we could find ourselves in a situation where, more broadly speaking, the Australian market is benefiting. So growth and value stocks moving up at the same time. That would be nice.
Speaking of benefiting, we've seen a bit of a bounce back on the Australian dollar. It did touch below 73 US a few days ago. Where now? Why?
Yeah, look, the Australian dollar is certainly struggling at the moment. We talked about these falling Australian bond yields. Australian bond yields have fallen faster than their US counterparts, and that means that currency holders are getting a lower return on a relative basis on their Australian investments, potentially then on the US investments. So typically, currency investors, they like that carry. They call it the carry trade. With that now looking less attractive on the Australian dollar is struggling. We've also seen some weakness in iron ore prices this week. Oil prices are down, copper prices are pulling back. So these are all short-term, probably even to medium-term drags on the Australian dollar. It has bounced a little bit, but the long-term trend is still very much the downside. Personally, I wouldn't be surprised to see the Australian dollar trading in the low 70s probably over the next month or two, even as some of those trends continue.
And finally, Bitcoin. I mean, it's been on a downward trajectory for the past few months. Even though it's at a 1 week high right now, it's still down 50% from its April peak. What are your thoughts?
Yeah, well, Bitcoin was looking very shaky at the start of the week, Ricardo. It broke below that psychological 30,000 support level. Fortunately for Bitcoin, at the B Word conference, now this is where the Twitter founder, Jack Dorsey, ARK Invest fund manager Cathy Wood, and Tesla CEO Elon Musk came together to have the quote-unquote talk about Bitcoin. And in the 24-hour period just before and just after that chat, Bitcoin rallied back over that 30,000 mark, trading around about the 32,000 mark. Incidentally, if you look at the broader crypto space, we saw about $200 billion worth of market capitalization stacked back on after that discussion. So In the short term, we are getting some positives coming through from that. It could spur some short covering from some of the hedge funds that were betting on a move down to 20,000. It may get some of those retail investors coming back in on that fear of missing out. I would suggest, though, that the longer-term trends are still in play here. They're still heading to the downside. I can't see a major long-term bottom in Bitcoin being set until we at least have one more big sell-off, and that could take us down to that 20,000 level, in which case we're telling clients that would be a very opportune place to buy.
Capolingua there from ThinkMarkets. And let's take a look at casino stocks, because they were down across the board. Crown Resorts off by 2.2%. Star Entertainment down by 0.5%. Sky City down by 0.65%. It's a merger between our biggest casino operators taken off the table. Star saying it's withdrawn its $12 billion tie-up proposal with Crown Resorts, claiming it's had little engagement with the company on the deal, and that the issues raised at Victoria's Royal Commission into Crown Melbourne have the potential to materially impact the value of Crown. Now, Crown says it remains willing to engage with the Star in relation to a potential merger on terms acceptable to both companies. So what happens now? Here's Julia Lee from Burman Invest.
It's a negative for Crown having an interested party walking away, but Star could still be the winner. If Crown does continue to have problems with its licence, whether it's owned by Crown or taken over by another party, Star is the front runner to be the operator of Crown's licence.
Julia Lee there from Burman Invest. Don't forget you can listen to this stream as a podcast on the SBS Radio app, Spotify and Apple Podcasts.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.